Bloomberg on the Economy with Mike McKee and Carol Massar. Listen on demand via our Bloomberg Radio Plus app. Now available free for both iPhone and Android devices.
Jim Rogers is back with us. He's the chairman of Rogers Holdings. Flew all the way in from Singapore just to be with us today, and we really appreciate it.
Absolutely, Mike. All the way from Singapore to be on Bloomberg. Makes my day.
Well, a lot of things we could talk about from an investor's perspective, too. Two things making news these days. Obviously, the financials. They're reporting earnings, and Vikram Pandit resigns. And then you've got housing. Which do you think matters more at this point? Which one would you look at as something that's going to grow and provide more value to investors?
Oh, neither. I don't pay too much attention. I pay no attention to short-term things. I don't even usually know they're occurring. My view of the world is I try to get the big picture right. I'm very worried about the world economy in 2013, 2014. What happens in October of 2012 is not of much significance to me.
Well, what is going to move the economy? What is going to move your world in that time frame then? What things do you keep an eye on?
Well, every 4 to 6 years since the beginning of the American Republic, we've had economic slowdowns. Well, you can add 2013, 2014. We're due for another one. They've always occurred. There's always been a reason. There are different reasons at times, whether it's the Federal Reserve, a war, or debt, or whatever it happens to be, inflation. And so I'm worried that the next year, after the American election, we're going to see serious problems in the world economy, and we should all be getting worried and prepared. That's how I look at the world. What happened to housing in the fall of 2012 is not too significant to me.
Unless housing
I quickly hasten to add that there are many people who are very short-term and very good at it. I've known some great short-term traders in my day. I wish I could do it. I wish I were a good short-term trader.
If housing starts to pick up for a change, that could have longer-term implications for the economy.
Well, it definitely could. There could be a rally. There should be a rally. Anything that collapses like housing collapsed in the U.S. should have a rally. That's the way markets work, and it will. Is that going to solve America's problem long-term? Mike, America's the largest debtor nation in the history of the world. I mean, even if housing doubles from here, that's not going to change the fact that we've got staggering debt problems that are getting worse and worse and worse. This cannot go on much longer.
I want to ask you about that, but I suppose I should ask if you have any thoughts on Mr. Pandit's departure.
No, I don't pay too much attention. I was very surprised when he got the job in the first place, given that he was a hedge fund operator. And, I mean, he's apparently, I've never met him, apparently he's a very competent person, but somebody who's never been a banker, it just seemed surprising to me. But other than that, I don't have a clue about why he got the job or why he lost the job, or why he quit, whichever he did.
What do you think of the financials in general?
Well, I'm not very keen on them. I'm short J.P. Morgan, for instance, or just as of yesterday, shorted the calls. Financials had a big boom and then collapsed. And my experience in the markets is when something like that happens, it takes a long time for them to talk like a technician, to build a base. And so I would suspect that financials will sort of fluctuate, but basically be building a base for another several years.
Why J.P. Morgan as a example bank, or because there's something particularly you don't like about that stock?
Well, everybody thinks it's great, first of all, and second, it's back near its all-time high. They got they got a person in the commodity division who doesn't understand the business. They got big credit card problems, and basically it's loved, and everybody fears it cannot do no wrong.
Well,
when I find something like that, I get suspicious.
Everybody thinks Jamie Dimon can do no wrong, or if he does, get out of it.
Well, I'll leave that to you and Jamie, but I'm just saying that the image of J.P. Morgan is it can do no wrong, and I'm always skeptical. I know that they can do some wrong in some of their divisions, and I'm skeptical about financial companies, as I explained.
Well, as you go forward and you look over the time horizon that you invest, that you were talking about, what do you look for? What's a good investment? How does it fit into your strategy?
Well, I'm pretty simple, and I'm pretty lazy, so I like to find things where they're cheap, where they're making a long-term bottom, to talk like those people, and where I see positive changes taking place. Right now, for instance, I'm looking at Russia. I'm excited about Russia. I've been skeptical on Russia for 46 years. Now, for the first time in my life, I'm getting optimistic. I think it's cheap. I know it's cheap, historically anyway, and I think I see positive changes taking place. Russia's been a disaster for 95 years, since 1917. Well, I think that's changing.
You think that there's enough of a legal system and a ability to get your money out that you don't worry about Russia at this point?
It sounds like America, doesn't it? Well, listen, whenever something's changing, it always starts from a terrible disaster. Look at China 35 years ago. My goodness, it was a huge disaster. Nobody would have thought about putting a penny there, and yet that was the time to do so. The same with Myanmar right now. No, of course. One of the reasons I've been skeptical about Russia is because there has been no legal system. They say, oh, give us your money. You can make a lot of money in Russia. And as soon as you do, they take it away from you one way or the other. But I think that's changing. Yes, of course. If I'm right, in 10 or 15 years, we'll look back and say, oh, my goodness, Russia now has a sound legal system. Now they're honest. They're moral. They play by the same rules the rest of us do. You can ask me in 15 years.
Aren't they still too dependent on petroleum and
well, that's a negative. Not a negative so much. It could be a positive if petroleum prices continue to do well, which I expect. They are a huge natural resource-based economy. Mike, I can go on and on and on with the negatives in Russia. That's why it's down. That's why I've been skeptical for 46 years. Yes, there are many negatives, but in my view, Mr. Putin, for some reason, and I'm not sure why yet, seems to be changing. Maybe it's because he's worried about his legacy and history. Maybe because he realizes that the world considers him not such an honorable person, maybe because he knows he has to play by the rest of the world's rules now. For whatever reason, he seems to be changing. If you put money into Russia now, in many cases, they will invest alongside you. If you make money, they make money. If they lose money, you lose money. I mean, they say, and they seem to be playing by the real rules now.
Maybe it's that punk rock band that criticized him.
Well, we can talk about that, too.
Jim Rogers is our guest from Rogers Holdings. We'll be right back here on The Economy. And coming up, we'll continue looking at the Citigroup news for the day and the presidential debate tonight. All that on Bloomberg Radio. Is our guest. He's the chairman of Rogers Holdings. He makes his home in Singapore, and I was just wondering, it just occurred to me when Karen was talking about the Yankees playing tonight. You move overseas like that, do you miss U.S. culture, whether it's sports or entertainment or something like that, or?
Well, Mike, when I left New York's my favorite city in the whole world, and I really, really, really almost backed out of selling my house because I hated doing it. But since I've been in Asia is so unbelievably dynamic and exciting right now that I miss it less and less. To my surprise, I'm very pleased in Asia. We're very glad to be there, and it's very, very exciting. You should come visit.
We'd love to. I presume we would not be alone. Are you seeing more and more Americans move over there?
Oh, yes. It's astonishing. And what I find very interesting is more and more people are coming through Singapore. I cannot tell you, every day I get a request from somebody coming through Singapore who'd like to have coffee or lunch or dinner. It's amazing to me how many people are coming to Asia these days.
All right, now here's the question. We had the same sort of thing go on with Doha, with Abu Dhabi and Dubai. All the fund managers moved over there because this was the next great market. Is that a risk?
Maybe I got in at the top. Maybe I'm absolutely setting the top in Asia.
I mean, is there enough business there that
Oh my gosh, it's staggering. Singapore is becoming. A lot of money is leaving Switzerland. A lot of money is leaving Europe as far as investment management is concerned because they're not as competent anymore and it's expensive, and much of it is moving to Singapore and Hong Kong for many, many reasons. No, there's staggering amounts of business going on in Hong Kong and Singapore especially.
Well, let's talk a little bit about what you were mentioning before.
Wait, I just want to say one thing about that. The largest creditor nations in the world now, Mike, are China, Korea, Japan, Taiwan, Hong Kong, Singapore. You know who the largest debtor nations in the world are and where they are. You can look out the window.
One of them, right?
You can look out the window, and the ones you can't see are even pretty close to here. No, the assets are in Asia now, and the debts are in, where they are.
Well, let's talk about China. You just mentioned. How concerned should we be about their economy at the moment?
Well, China's been trying to slow down for the last 3 years. So anybody who's surprised at what's going on in China hasn't been listening to Bloomberg because, it's been broadcast pretty widely around the world. They've been trying to kill an inflation problem. They've been trying to kill a property bubble. It seems that they've been somewhat successful. So they've been doing the right thing as far as I'm concerned. And their economy is slowing. First of all, their customers are in the West are not doing well. And secondly, they've been trying to slow down. So it shouldn't be a surprise. But remember, America had many slowdowns as we rose to power and glory. So it's not unusual for an economy to slow down. I mean, why can't China go into a recession? America's had 15 depressions in the 19th century as we rose to power and glory, and we did a pretty good job.
There's an argument made that because of the nature of their economy, the command control economy, that it would be harder for them to recover from a recession.
Well, quite the contrary. You might say the opposite. I mean, China saved a lot of money for a rainy day, and when it starts raining, they have money to spend, and they do. We in America don't have any money saved for a rainy day. We're the largest debtor nation in the history of the world. So I think it would be easier for the Chinese to recover. And interestingly enough, right now there's a debate going on in China. China's been following Keynesian economics because that's what the West did, but they're starting to say, wait a minute, Keynesian economics didn't work in the West. It never has, and they're starting to discuss whether they shouldn't take a more free market approach. Now, these are communists, and they're having
Within
a debate whether
of...
they should be more free market.
Yeah.
Right? We in the West are saying, oh my gosh, let's go more and more towards socialism.
Well, we are in the midst of a presidential campaign here revolving around some of those questions, how much to spend and how much to borrow. How much of who wins is going to influence your investment outlook, because you're talking about this longer term?
Zero. I mean, both these guys are the same. They're the ones who got us into the problem. If you look at their positions, they're almost exactly the same on every issue. The only difference is if Obama wins, his friends are going to get more money. If Romney wins, his friends are going to get more money, but the rest of us are going to be worse off. Unless you're friends with them, and I'm not, the debt's going higher. It's going to be a disaster.
It doesn't sound like you're confident about any kind of deal being reached on this fiscal cliff.
Are you? Mike, please. Some kind of deal will be reached, but it's not going to do any good. They're not going to solve the problem. America's got a deficit of over $1 trillion with a T dollars every year. So suppose they cut it down to $500 billion every year. I mean, we've got disaster facing us, and none of these guys understand it. They just want to get elected. They're not interested in you and me or the future. They're interested in getting elected.
So are you optimistic or pessimistic about the next couple of years?
I'm very pessimistic. America's had recessions, as I said, every 4 to 6 years since the beginning of the Republic. We're overdue. It's going to come. The next one's going to be worse, Mike, because the debt is so much higher. We had a recession in 2002. 2007 and 8 was worse because the debt was so much higher. Well, now the debt has gone up by staggering amounts, not just in the U.S., but in Europe as well.
Well, you're talking about the U.S. I sort of meant for the rest of the world.
The rest of the world's debt has gone up too. And in Europe, they talk about austerity. They're all complaining about austerity. But Mike, nearly every country in Europe's got higher debt in 2012 than in 2011. Nearly every one of them is going to have higher debt in 2013 than 2012. This is not austerity. This is politicians complaining.
So how do you protect yourself? What do you do as an investor?
Well, I mean, everybody has to make their own decision about that. What I've done is I own natural resources, I own currencies, I'm short stocks, and I'm short bonds. Being short stocks is not helping me at the moment, but hopefully I'll come through in the end.
Would you? Which currencies would you own?
Well, I own the Japanese yen, the Swiss franc. I own the U.S. dollar at the moment, not because I have any confidence in the long term of the U.S. future of the U.S. dollar, but because there's more turmoil coming, in my view, and when there's turmoil, people rush to the U.S. dollar. It's not a safe haven, but people think it is, so I own the U.S. dollar at the moment.
If you could, I've only got about 30 seconds, if you could own the Chinese renminbi, would you?
Oh, no, I do own the renminbi. Sorry, I certainly own the renminbi, and every chance I get to buy it, I buy more. You can't just pick up the phone and buy renminbi, but whenever I can do it legally, I buy as much as I can.
Jim Rogers, unfortunately, we got to leave it there, but thank you so much for coming by. Hope you'll come back again soon. It's always great to talk to you and get your view on the world, because you're coming from a different place than those of us sitting here in New York.
It's always worth the trip, Mike. Thank you.
Listen to Bloomberg on the Economy weekdays at 10 a.m. Eastern on Bloomberg 1130 in New York, or on Sirius and XM Satellite Radio Channel 113. Copyright 2012.